Alex Stanzik, and I have with me today my friend and one of the smartest men I know, Mr. Jim Rickards. Welcome, Jim.
Thank you, Alex. Thanks for that introduction.
So, Jim, with everything going on lately, gold briefly punched through the $1,300 USD per troy ounce ceiling at the London Open. Ray Dalio, who is one of the world's most respected hedge fund managers, the guy manages money for governments as well as some of the world's largest sovereign wealth funds, recently recommended a 5 to 10% allocation to gold. You have any thoughts on gold very briefly before we dive into the rest of our topics?
Gee, 5 to 10% allocation. Where have we heard that before? Well, it's not. It's not like I have a lot of respect for Ray. He's the most successful hedge fund alternative fund manager in history, certainly in the Hall of Fame, along with George Soros and Bruce Kubner and Sandra Druckenmiller and a relatively small handful of others. I've had occasion to meet him in Greenwich. We kind of live nearby. I'm over in Darien, so yeah, a lot of respect for his view. But he's come around to exactly what we've been suggesting to listeners all along: 5 to 10%. I personally recommend 10%, but that's kind of season to taste, depending on your risk appetite. People say, oh, gold's risky or gold doesn't have a yield and all this, and I'm nervous having it in my portfolio. I just look at people and say, I would be nervous not having it in my portfolio. I can't imagine, going to bed at night or waking up in the morning and not having an allocation to gold. And, people, people kind of disparage it in a lot of different ways. And in fact, they always want to put words in your mouth. They'll say, I'm out there a lot. I give presentations. I do podcasts like this one. I have my book, The New Case for Gold, and people go, oh, Jim Rickards says, the world's coming to an end, sell everything, buy gold. I have never said that. I don't believe that. The world's not coming to an end. We may go through some tumultuous changes. There may be some severe stress in the international monetary system, but we've seen that before many times over the past 100 years. So that's nothing new. When that happens, you're going to want gold. I wouldn't go 100% in anything, including gold, cash, or any other asset. But 10%, if you do 10% in gold, that leaves 90% for everything else. And I'm often asked, well, what about the everything else? And there's room for cash. It's a good asset in tumultuous times. Land, real estate, museum quality collectibles. I invest in private equity. I've invested in some technology startups and some natural resource startups, particularly in the water space. So there's diversification is obviously important. But if you don't have 10% in gold, and I'll echo Ray Dalio and say 5 to 10%. Man, you're driving without insurance, because if things get bad, that's the first thing you're going to want to get, and you're going to find that you can't get it.
Indeed. All right, so let's dive into some of our subjects. Last podcast, we discussed disinflation, slowing of the U.S. economy, Fed tightening into weakness, Fed's new pet theory, and North Korea. That's actually our first topic. We first started covering North Korea back in our April podcast. And since then, it's gone from being on nobody's radar to what one white paper described as the world's biggest tinderbox. So I'm going to do a quick recap for those not familiar with the backstory. We first started talking about North Korea's weapons capability in our April podcast. If you want to hear it, it's available on our podcast page. Jim, you went on a major news station and said that the North Korea threat was escalating and that the U.S. would be at war with North Korea in short order, which was met with huge skepticism. An hour later, North Korea launched an ICBM test missile. So continuing, next, North Korea conducted a series of ICBM tests. U.S. intelligence has confirmed they can fit a miniaturized nuclear warhead into a missile-sized payload. Intel estimates are that they're sitting on up to 60 warheads at this time. On Tuesday, August 8th, Trump made the comment that North Korea had best not make any more threats to the United States and that they would be met with fire and fury like the world has never seen. On August 9th, North Korea revealed its plans to strike Guam with 4 nuclear missiles, and that the green light to do so would come from Kim Jong-un. So current estimates are that it would be a 14-minute flight time for a North Korean missile to reach Guam. Now, for those who are not familiar with Guam, it's a U.S. island territory in Micronesia. It's a forward staging area for projection of U.S. sea and air power. It's home base to a number of U.S. nuclear attack submarines. These aren't the ones that vertically fire nuclear missiles, but they hunt other submarines. It's their primary role. But they can also launch Tomahawk land attack missiles. They can provide insertion options for U.S. SEAL teams. Also located on Guam is Andersen Air Force Base. It's the home to the U.S. 36th Wing. It includes intelligence aircraft, fighter interceptors, and the air base, importantly, acts as one of only 2 critical forward air bases for U.S. long-range bombers in the Pacific. So it's a pretty important installation. On August 10th, the U.S. Air Force, in an unprecedented move, transferred all 3 main bomber types in the U.S. arsenal to Guam, and that includes B-1 Lancers, B-2 stealth bombers, and B-52 Stratofortresses. So, as of now, North Korea has backed down on the threat regarding Guam, but the fact remains that they are continuing to develop capabilities in defiance of the world asking them to halt their nuclear weapons program. So, Jim, let's game theory a bit. Where does it go from here?
Well, first of all, Alex, that was a fantastic summary. I've actually been, as you know, to the Pentagon a number of times for briefings on different topics. I feel like I just sat through a Pentagon briefing because that was very thorough. I don't have a lot to add to that in terms of logistics, other than to say I've actually been to Guam and Saipan in the northern Southern Marianas in the area you described. And yeah, it's U.S. territory. I mean, I was very disturbed when after the ICBM test, newspapers were publishing. Well, before that, there was another, I think the Hwasong 12 missile. There were other tests that were more in the intermediate range. Then you're right, they made a big breakthrough with this intercontinental ballistic missile, which is a much further range. But these things, the newspapers are publishing maps showing concentric circles from Pyongyang as to the range of the missiles to give readers an idea of how far they can go. And I saw one that they said, well, we're not worried because it can't reach Los Angeles. And I looked at the map and it covered Guam and Alaska. I said, well, the last time I looked, Alaska was a state and Guam was U.S. territory. I mean, I don't understand this view that if it's not a densely populated city, which of course we should care about, that somehow it's not a threat to the United States, because it certainly is. And you're right, Guam is U.S. territory. A lot of Americans living there. So the point is, this escalation has continued. Now, the sequence, let's just do the recent sequence, because I think you did a good job of covering this has been going on for 25 years. We may have been warning listeners about it ahead of the pack, so to speak, months ago, but this threat has been escalating since the mid-90s with Kim Jong-un's father. And Bill Clinton did a deal with him, which we released some sanctions in exchange for promises to discontinue the program. They immediately broke that deal. Then George Bush did a deal with them, whereby also gave some sanctions relief, and they immediately broke that deal. So their track record is that they lie and they buy time and they get concessions and they keep building the missiles. And I do think the Trump and the Obama administration essentially did nothing for 8 years. So this thing's been kicking around since the mid-90s. And I do think the Trump administration deserves credit for clarity, saying, okay, that's it. We're the best line I saw, we're not going to negotiate our way to the negotiations. If you want to come to the table and talk to us, we'll meet with you. And we'll tell you right now that what you have to do is verifiably discontinue your weapons programs. And what you get in exchange for that, let's talk. And obviously there would be sanctions relief and maybe even integrate the North Korean economy into the global economy. They're actually very rich in natural resources. It's an interesting country. They could be a commodity-driven exporter and have a decent economy, but of course they're completely cut off. So now the recent that's the backstory. The recent sequence of events was go back to August 8th, 9th, and 10th. The stock market went down about 1.2%. That's when this rhetoric was dialing up, exactly as you described, Alex. So, Kim Jong-un talking about attacking Guam, Trump saying this will be met with fire and fury, Kim Jong-un saying, I'm waiting for the battle plans, we're launching at Guam, etc. Now, that weekend, I have to look at a calendar, I think the weekend of August 12th and 13th, what happened was a lot of national security officials went on television. General, H.R. McMaster, who's the national security advisor, Rex Tillerson, Others gave interviews, and they dialed it back. They said, "Look, war is not imminent." Yeah, by the way, you can't. You have to agree with that. War's not imminent. If it's coming in, if there's a high probability it's coming in early 2018, is that imminent? Well, not in the sense that someone's going to, launch an attack tomorrow, but that's close enough for investors to start thinking about it if they cared, and I certainly think they should. So yeah, I'll buy the fact that it's not imminent. They dialed down the rhetoric, and then Monday, Kim Jong Un seemed to respond in kind. He said, "Well, I've got the battle plan, but I'm not ready to launch yet." So that seemed, at least by his standards, a little bit conciliatory. And then Trump made a statement saying, "Well, we welcome this not thaw, but we welcome this progress, and maybe there's some basis for talking." So all of a sudden, stocks take off. It looks like the threat's over. Everyone's dialing it down. That is not how I read it at all. If you actually look at what Kim Jong Un said, he said, "I will not launch at Guam if the United States engages in acceptable behavior," or maybe state in the negative if they don't engage in unacceptable behavior. That was a very specific reference to a joint U.S.-South Korean military exercise that is conducted periodically. It's a big one that they're going to launch on Monday, August 21st. And these military exercises, they have very long engagement periods. And this one lasts for about a week, I think, August 21st to 28th. Has a lot of moving parts, all branches of the military. So what Kim Jong-un was saying is, I won't launch at Guam if you call off that exercise. That's what he meant by the U.S. not doing anything, engaging in bad behavior. You don't have to read between the lines very much to see that's what he meant. Well, we're not going to call off the exercise. The U.S. is not going to be bullied. We're not going to be threatened. This exercise is long planned, and we're going to go ahead and do it. So the minute we do, we have now broken the condition on which Kim Jong-un was refraining. So my expectation is he will test one of these systems. Now, here's where it gets really interesting. You talked about the miniaturization, Alex. There are actually a lot of technologies you have to master to be able to do this. You have to get your hands on uranium or plutonium. You have to enrich it. That's very demanding technologically. You have to build missiles. That's demanding technologically. They have a certain range. Then you have to miniaturize the warhead so you can fit it on the missile. A nuclear device that would just detonate and create a chain reaction and be a nuclear explosion could be the size of a truck. That's called a device. It's not necessarily weaponized because it's hard to deliver, but you get it small enough. And then finally, you've got to what's called ruggedize it, which means that these missiles go into space, and the ICBMs do. And when they come back into the atmosphere, it's a lot of stress and heat and vibration, and it's got to survive all that. Well, one by one, he's mastered all these technologies, and it looks like he's getting to the final two, miniaturization, which you mentioned, and ruggedization. That comes from testing. But there's one more thing he's doing, and this is where I think he gets very, very dangerous. He's got a submarine, and he might launch, there's some reason to believe that he will launch a submarine-launched ballistic missile. And that's different from an ICBM because you can move submarines around. So the U.S. has been betting on this THAAD defense, terminal high altitude defense, where we can, to some degree of accuracy, shoot down these missiles. No one wants to rely on that because it's not 100%, but it's better than nothing. But you can move a submarine to create a trajectory where you're evading the THAAD missile batteries, number one. Secondly, you can move that submarine to within range where it would support an intermediate range ballistic missile attack. It doesn't have to be an ICBM. So it's a total game changer. And there's some reason to think that's what he's going to do. He also might detonate a nuclear device, a nuclear explosion to perfect that technology. That's not a missile launch, that's a nuclear detonation. But any one of these things is highly provocative. So my expectation is that the U.S. will go ahead as planned with this war game, that Kim Jong-un had planned all along to do the test, knowing the U.S. would do this, put this marker down to make him look like a good guy. But of course, he's not a good guy, and that he'll do something extreme if he doesn't aim a missile in the vicinity of Guam, which would practically be an act of war. It could be the submarine launch test or a nuclear explosion, and that'll get Trump going again, and we'll be right back where we were on August 8th. So this threat has not gone away. We had kind of people dialed it back a little bit last weekend. I think it's coming back at us, and the stock market is extremely vulnerable. You don't have to reach hard to find people who think it's overvalued. We don't need to belabor that. I'm not the stock market guy, but go to any, from Robert Shiller to Warren Buffett to any well-respected voice on that topic, and you hear universally that the stock market's overvalued, headed for a fall. And then the question is when, and the answer is, could be any time. It takes a catalyst. Well, this could be the catalyst. So, on top of the terror attacks we've seen, in Spain on Thursday and Finland on Friday, and there just seems to be no end to it. That was enough to get the stock market heading in the wrong direction the course of Thursday and Friday. Let's see what happens. But I think stocks are vulnerable to this kind of shock. The market has not priced it in, and I do think it's coming probably next week.
Sure. So, this reminds me of many conversations you and I have had in regards to complex systems and critical states, and that really is just a shift of psychology. And it's just human nature. People, after a while, people become kind of apathetic towards things, and it takes sometimes, unfortunately, events which would shake people up and wake people up, and that's kind of what we're looking at. So moving on to our next topic, by the way, we will continue to monitor what's going on with the North Korea situation, and if there are important updates, of course, Jim and I will probably discuss it again in a future podcast. But our next topic here is the debt ceiling and the so-called government shutdown. So this topic has been discussed over and over again. Personally, I'm kind of disgusted with the fact that we have to do this versus proper fiscal management at the government level. And I know I'm not alone in this. The United States is now sitting on 19.974 trillion in debt. That is 165,851 US dollars per taxpayer. But it's still a reality we have to deal with on a regular basis now. So Treasury Secretary Mnuchin has written a letter to Congress asking them to raise the debt limit no later than September 29th. Jim, what's your take on all this?
Good luck with that. So you're absolutely right, Alex, in terms of the backdrop. But let's just sort out for the listeners. There are two really big but separate deadlines converging on September 29th. And the way the media reports it, they throw words around. They tend to get mashed together, I think, in a lot of readers' minds or listeners' minds. But they're separate and they're converging. It's like two meteors hitting the Earth at once. One is the one you mentioned, which is the debt ceiling. And this has to do with, the borrowing authority of the U.S. Treasury. Is the U.S. Treasury authorized to borrow money to pay the bills of the United States? The bills being, everything from Social Security, Medicare, Medicaid, operations of government, military, you name it, the whole budget, which is in the around $500 billion dollars a year. Well, actually, that's the deficit. The budget's well over several trillion, but that has to be authorized by Congress. Now, until it's authorized, the Treasury is just running on fumes. It sounds strange, but the Treasury has a bank account at the Fed. They also have bank accounts at other banks. And it's no different than your bank account or my bank account. If we have money in the bank and we spend it and there's no income, that account goes to zero. And all of a sudden your checks bounce and you can't spend any more money. And that's the situation, believe it or not, that the U.S. Treasury is facing. The Treasury is running out of cash. They have cash coming in all the time from tax collections. There's always new cash coming in, but it's going out too in terms of payments. And if you run negative cash flow and draw it down, so that's the situation the Treasury is facing. They need Congress to authorize an increase in the debt ceiling so they can borrow more money, so they can pay their bills. It's that simple. The problem is the Congress is not really functional right now. It's not inclined to do so, and the reason is the Republicans do have a majority of the House and the Senate. I mean, that's well known. But the Republicans can't agree among themselves. There are members of what's called the House Freedom Caucus. By the way, this is kind of a replay of Obamacare. I don't want to get into the weeds in terms of the healthcare debate, but I think a lot of listeners know that the Republicans came into Washington with control of both houses of Congress and the White House, and they go, man, we're going to repeal Obamacare. And they didn't do it, and they're not going to do it because they couldn't agree among themselves. They didn't need Democratic votes, but they did need to agree, and they couldn't do that. Same thing is playing out. This House Freedom Caucus says, well, we're not voting for the debt ceiling increase unless we get some conditions. And what they want to defund Planned Parenthood. They want, there's an issue around sanctuary cities. There's an issue around money for the wall. The White House wants money for the wall. And there's an Obamacare fix. It's not the repeal of Obamacare, but Obamacare was running out of money. And that is a separate appropriation that's got to get through. So there's a bunch of stuff standing in the way of this vote. Now you can say, well, okay, the heck with Republicans. Let's just get moderate Republican votes and some Democrats. Well, the Democrats are sitting there, and this Nancy Pelosi, right? She's like, why should we help you guys? You've run us out of town. You ridiculed us. You called us every name in the book. You don't want to work with us on anything else. You don't like our agenda. Why should we give you any votes? Even though the Democrats in general favor raising the debt ceiling because they like spending money and they like all these programs, they're not inclined to vote for it for two reasons. Number one, why should they help Republicans? Number two, they don't want all these riders attached to the ones I mentioned. I mean, if you put defunding of Planned Parenthood in a debt ceiling vote, you will not get one Democratic vote. So it's not clear where the votes are coming from. And now let me just shift gears for a second and talk about another event, which is the budget. Now the budget is different than the debt ceiling. The debt ceiling is borrowing to pay your bills, but the budget is, that authorizes all the government spending, that gives rise to having to pay your bills in the first place. The U.S. is on a fiscal year. The United States fiscal year runs from October 1st to midnight on September 30th. And that's it. It's like most of us are, December 31st, New Year's Eve. The U.S. government celebrates New Year's Eve on September 30th. This year, September 30th happens to be a Saturday, when the banks are closed and the government's not working. So it's really September 29th, which is the Friday. So September 29th is D-Day in terms of keeping the government open. And you can only do that now there are two ways to do it. One, you could pass a real budget, which is kind of what you were saying, Alex. Are we mature enough to actually do that? And the answer is no. But the other thing you can do is what's called a CR, which is a continuing resolution. And it basically is a vote by Congress says, okay, we agree that all the agencies can keep spending whatever they were spending before. We'll get back to you about new spending, new programs, terminations, all that stuff. We'll fight about that later. But for now, keep spending. That's what a continuing resolution is. Now, here's the thing. That's a hard stop on September 29th for the reason I mentioned. The debt ceiling doesn't have to happen at the end of September. It can happen at any time. In years past, I've seen this happen in March. I've seen it happen in other times of year. It just so happens by coincidence that it looks like the Treasury is going to run out of cash on September 29th. So you've got, as I say, two meteors, two asteroids striking the Earth. One is the budget authorization in the form of a continuing resolution. The other one is a debt ceiling increase in the form of authorizing the Treasury to borrow money. They don't have to happen at the same time, but they are happening at the same time. And they're subject to the same dysfunctions. In other words, the issues I mentioned, the wall, Planned Parenthood, Obamacare fix, sanctuary cities, those issues that pop up in the debt ceiling debate also pop up in the continuing resolution budget debate. There is no consensus on any of them. It's not clear where the votes are coming from. Now, just to kind of, add another layer of intrigue here, or dysfunction is probably a better word, it's not clear that the White House is so afraid of a government shutdown. I mean, that's what happens, by the way. You get a government shutdown, non-essential workers stay home. The Army is still on duty, the military is still on duty, the TSA still works at airports, the post office is still open, but there are a lot of government functions that do shut down, including popular ones like, national parks and monuments. They're the ones that tend to be most visible. The White House might like that. The White House, they're not exactly Republicans. I mean, they kind of are and they aren't. I mean, Jared Kushner and Ivanka, they seem like Gary Cohn. All those guys seem more like Democrats. Trump is very hard to categorize. I wouldn't call him a conservative Republican at all. He's a nationalist. He's a Trumpist, but he's a capitalist. He's a lot of things, but I wouldn't call him a conservative Republican. So he's just as eager to fight with the House Freedom Caucus and Mitch McConnell as he is with Nancy Pelosi and Chuck Schumer. And he might say, what we need, folks, is a good government shutdown. Let's show the American people just how dysfunctional we are, just how immature we are, et cetera. Again, I don't want to take sides in that debate. My role is just to warn listeners that these two things are coming together. I don't see how they get resolved. And by the way, on top of everything we just mentioned, Alex, it takes time to do these things. There's something called the legislative calendar. Don't think for a minute that Congress works, 7 days a week or even 5 days a week. They have a tendency to they go back to their districts on the weekends. They have a tendency to show up Monday night and leave Thursday afternoon. So they probably work about 3 days a week, not to mention holidays, and their idea of a Labor Day weekend is a 10-day recess. So most of us are happy to get an extra day off. They'll take 10 days, for Labor Day. So the point is the legislative calendar only shows 11 working days between now and what we're talking about, the September 29th train wreck. It takes the members of Congress like 11 days to, find their way to the bathroom, So the point is they've got a lot of other stuff on their plate. They've got judicial appointments. They got to confirm the FBI director. There's some like cats and dogs legislation around Obamacare. We have a national security crisis with Korea. Not to mention all the sound and fury about racism in Charlottesville. Again, don't want to get in the weeds on that, but that's obviously adding to the dysfunction. So put this all together, the fact that the White House might not mind a train wreck, the fact that there's probably a train wreck coming anyway, the shortness of time and the degree of difficulty and the lack of consensus, I think you could have a government shutdown. I think you will have a government shutdown on October 1st, really effectively midnight, September 29th. And I think this debt ceiling crisis is going to go right up to the deadline. Now, that doesn't have a date certain. September 29th is an estimate for that. But imagine you're running a bond portfolio and you're sitting there saying, like a big one, like a pension fund or something. And you're like, is the United States going to pay me the interest due? And by the way, there's big outflows on October 1st because it's the first day of the month. You got Social Security and all these welfare programs and benefit programs. And that's one of those days when the outflows are greatly in excess of the inflows. People tend to pay their taxes in April, and by October, you're running on empty. So this is a mess on top of all the other, serious national security, terrorism, and other messes we described. One more reason, in my view, why investors should be over allocated to gold right now and also have some cash.
So when you're discussing the schedule of how these politicians work, I'm just over here shaking my head, thinking, the good life. Hopefully someday we'll be able to rein that situation in.
Yeah.
Okay, so moving on to our next topic. As you and I have talked about many times, the world economy is heavily interlinked, and many of our listeners are professional money managers. So oftentimes we will discuss what's going on in other jurisdictions. Today, I'd like to talk a little bit about China. There's this disturbing trend going on over there where the banks are slowly becoming the majority in, or I should say the larger share of the investor base in these things called wealth management products, or WMPs. So, just from our discussions and what I've looked at in the past, the entire scheme of the WMP structure, it seems really questionable to me. Jim, what are the risks here and the potential spillover effects for the global markets?
Well, the risks are huge and the spillover effects are huge. And we've had a taste of this a couple of times recently. You go back to August 10th, 2015, so just about 2 years ago. China did a shock devaluation of the Chinese yuan. That's their currency. It's one that markets didn't see coming, that even the elites, the IMF and the U.S. Treasury and others did not see coming. China had their own reasons for doing it. That caused a shock in U.S. stock markets from August 10th to September 1st. Just go back and look at a chart. U.S. stocks fell about 11%. And it was worse than that. It wasn't just that they went down 11%. It looked like there was no end in sight. I mean, it happened to be from peak to trough. It was an 11% drawdown. But when you're down 10%, you didn't know that it was going to turn around at 11. It could have gone down 20 as far as you were concerned. Think about where you were on August 31st, 2015, maybe taking the kids back to school or on vacation or, getting ready for Labor Day weekend. But it felt, investors had a sick feeling in the pit of their stomach. It felt like there was no bottom. And then, the Fed rode to the rescue, and that was when we were going to have the liftoff in interest rates in September. They pushed the liftoff back to December, got involved in forward guidance, happy talk, and the problem went away. But it was pretty bad then. The second time was December 2015. December 2015. when China did a kind of stealth devaluation, they learned their lesson on the shock devaluation, so they were doing it in baby steps. But again, the U.S. market reacted badly from January 1st, 2016 to February 10th, 2016. The stock market also fell 11%. So U.S. stock market. So there you have two examples of what's called, you can say contagion. That's a good word. The IMF uses the word spillovers. Like one bucket spills over into another bucket. Pick your metaphor. But the point is, to say that the U.S. markets are isolated or immune or pristine relative to Chinese devaluations or Chinese financial market events is false. We have two examples of stocks almost spinning out of control based on Chinese actions. So let's come back to the WMPs. I'll take a minute just to explain what a WMP is. As you said, it stands for Wealth Management Product. It's a pretty simple concept. So you're a middle-class Chinese saver. You're not a princeling or an oligarch, but you and your spouse have a good job, and you got some savings, and you walk into the bank, and the bank officer says, okay, we have two products in effect. You can make a bank deposit, and we'll pay you 2% interest, or you can buy a WMP, and we'll pay you 7%. And most people think about that for 2 seconds, and they go, well, I'll take the 7%, thank you very much, and they do. But what kind of gets lost in translation, even in Chinese, is these wealth management products are not bank products. They're not liabilities of the banks. They're off-balance sheet special products. They're very much like CDOs. Because what they do is the banks take the money that people put into the WMPs, they bundle it, they go out and buy junk bonds or equity in real estate, state-owned enterprises, bankrupt companies, speculative land deals, ghost cities, you name it. But they're out there buying all this garbage, and so they look like these, Lehman Brothers CDOs from the 2007, 2006, 7, and 8 period, which of course almost brought down the world. Now, so they don't really tell that to the customer. I'm sure there's some disclosure somewhere in the fine print. No one reads it, and I've seen interviews with everyday savers and people walking out of a bank, and a reporter goes up and says, well, what did you do with your money? I bought a WMP, and they'll say to the person, well, don't you know that that's not the equivalent of FDIC insured? That's not a bank liability. It's not guaranteed by anybody. It's not. And they go, and of course, some people don't know that, but some people say, yeah, I know that, but Beijing will bail us out. And you hear,
that is the attitude over there. Absolutely.
Yeah, I've been to China a number of times. I've actually been out in the boondocks of China. I've met with provincial Communist Party officials, and I'm very frank with these guys. I was having tea in one office near one of these ghost cities, and I said to these guys, I said, can you build 7 cities here? I'm looking at them. They're all vacant. Every building I'm looking at is vacant. I said, and he did it all with debt. I said, how are you going to pay back the debt? And he goes, we can't pay back the debt. That's impossible. Beijing is going to bail us out. So you hear this over and over from, government officials to the man or woman in the street. So, but be that as it may, these WMPs are a Ponzi, and I don't just throw the word out there lightly. It's the case that, let's say I buy a 2-year WMP. So, and I bought it 2 years ago, and I go back to the bank, and it's maturing, and they say, okay, Mr. Rickards, we can roll over your WMP into a new 2-year WMP. And I might say, fine, I'm collecting my 7% interest, but Bernie Madoff investors collected their interest also. They didn't know that their money was gone. But what if I say, my kid's going to college in the States, I need the money, I cash out my WMP. Well, they've invested in all these junk assets, so they can't really cash out the WMP. But what they do, they sell a new WMP to the next person who walks in the door, and they take that money and give it to me. So the new person's happy because she's getting 7%. I'm happy because I got my money back. But meanwhile, the money's not there. You have to sell the new ones to pay off the old ones, and what you really hope is that the old ones roll over, so you never really have to, so that your net inflows are positive, so you don't have net outflows. This is a Ponzi. By the way, the chairman of the Bank of China, in an interview, and I quoted this in my book, The Death of Money, said it's a Ponzi. It's not my analysis. It happens to be my analysis, but we have it on record from Chinese officials. So that's where we are. And we all know that all Ponzi's fail eventually, and they collapse, and they'll cause a panic, and that's coming. But it doesn't have to be tomorrow. This, Ponzi can go on for a long time. Madoff ran his Ponzi for 20 years. 20 years. The guy's like, spending the money on himself, losing it in other things, but convincing investors that it's all good. And as long as you pay the coupon, people feel good about it. Now, I saw an article, a chart and analysis last week, and I think this is what you're referring to, Alex, which shows that the amount of WMPs is going down. And this was taken as a positive by the analysts. They said, well, this is great. China's finally stepping up to the plate. They're finally getting things under control. It's good that the leverage in the system is going down. Isn't this wonderful that WMPs are going down? I said, no, that's a nightmare, because that's like Bernie Madoff saying my assets under management are going down. Well, if you don't have the money and you get into net cash flows, negative cash flows, or net outflows in a Ponzi. See, if it was a real product, right? If it was wisely invested and you saw it going down, you might say to yourself, okay, that's good. There's more liquidity in the system. They're reducing leverage. They're not acting as crazy on real estate. It would be a good thing if it wasn't a Ponzi. But people forget that it is a Ponzi. And when you see assets in a Ponzi going down, that means the run on the bank has started, and this fire is about to spin out of control. So to me, that's one of the scariest indicators I've seen. One more reason to expect that China is about to implode. Now, just to be clear, nothing's happening in China until either the end of this year or early 2018. The reason for that has nothing to do with economics, everything to do with politics. There's a National Communist Party Congress. They haven't set the exact date yet. It'll be late October, early November, but be that as it may. And President Xi is going to be anointed, if you will, as the big Xi, the big man, the most powerful Chinese leader since Mao Zedong. And he doesn't want to rock the boat. So no crises are going to break out in in China between now and November, because he doesn't want to rock the boat ahead of this party Congress. And they can back that up because they still use firing squads if they have to. But the point being, once we get past the party Congress, Xi has achieved his power goals, and we're into 2018, and 2 + 2 does not equal 5. I think you're going to see some of these chickens come home to roost. And if you said to me, how does that play out? Like, what do they do? I would expect a devaluation of the currency, because devaluation of the currency, it basically it solves the capital outflow problem. You could reopen the capital account because people are not as anxious to get their money out. Once you steal their money, you can't steal it twice. So they say, well, I might as well sit here and not try to get my money out. But I would expect a maxi devaluation to boost exports, boost export-related jobs, cure the capital outflow issue. But right now, they're squashing everything. So don't look for drama from China before the end of the year, but I would look for a lot of drama next year.
What that reminds me of, Jim, is when you had mentioned that they all believe the government's going to bail them out if there's problems. I've been to China a number of times talking to money managers and government officials and whatnot. Before 2015-ish, I had kind of made a trip, talked to 5 of the largest fund managers in China. They all said the same thing. They weren't concerned about the banks, they weren't concerned about the markets. And then in June of 2015, if I'm sure you remember, there was the Chinese stock market crash. Right. And what ended up happening, interestingly enough, is that the government basically froze everything. They told them all, you can no longer trade, you're not allowed to sell. They were even going so far as to making criminal investigations to fund managers that were selling positions during that time. And they locked down the liquidity. So you've mentioned something like that in terms of ICE 9 in your recent books. And that's something, that's a big deal right now. Every professional money manager I talk to nowadays, that's the biggest question on their mind is, what is the liquidity like? And I might add to that, not only what is the liquidity like, but keep in mind that secondary markets, stock markets, etc., can get shut down by governments at any time. If things are going badly, it can happen. And if you're frozen out of markets, super careful.
It's funny. I had a conversation with an investor just the other day, Alex, and I pointed out that on October 19th, 1987, the major U.S. stock market indices, and I'll refer specifically to the Dow Jones Industrial Average, fell 22% in one day. Not a month or a week, but one day. In today's Dow points, a 22% drop would be 4,000 Dow points, not 400, which would be a really bad day. You know, the other day it was down, I don't know, 275, and everybody was all spun up. 400 would be, you know, dominate every headline. Imagine 4,000 Dow points. And the person I was talking to said, yeah, but they wouldn't let that happen. They've changed the rules. They've got circuit breakers, and they would close the exchange. I said, you're right. They would close the exchange. Now, you tell me, which makes you feel better, a 4,000 point drop or a closed exchange? Because at least with a 4,000 point drop, I can still trade. I mean, you can get out at a price. You might not like the price, but things are still transacting. But if you shut the market, that's ice 9. And of course, my thesis was that when you shut one market, the demand for liquidity moves to another market, probably money market funds, and then you got to shut that down. And then it moves to another venue, which would probably be, you know, run on the bank, and then you got to shut the bank down, et cetera, and it spreads. So I wouldn't be so glib or sanguine about the fact that you can close the exchange, which you can, because then you got to say, well, what's your next move? And as far as the Chinese bailout is concerned, just briefly, the fact is Beijing will bail them out. But then you have to say, you know, and this is what drives me crazy about Wall Street analysis, because they'll say, well, yeah, but Beijing will bail them out. I'm like, yeah, but what does that mean? You know, because it's going to cost $1 trillion to do this bailout we've been talking about. China has $3 trillion in reserves, approximately. About $1 trillion of that's illiquid. It's real money. I'm not saying it's fake wealth, but it's in the stock market. It's in hedge funds. It's in private equity. I mean, try getting your money back from Henry Kravis, right? He's not going to give it to you. So at least not until your 7 years are up or whatever. So take $1 trillion off the board because it's there. It's illiquid. There's another $1 trillion that has to be held in liquid form as a precautionary reserve to do this bailout. If you use that money, then you don't have the money you need to do the bailout. So that means there's really only $1 trillion of reserves in China that's not already spoken for, either in the form of illiquid assets or precautionary reserve. And when the reserves were going down in 2016 at a rate of $50 billion a month, you're broke in a year. So China is in a much more precarious situation than people realize, and you can't just throw the $3 trillion number around without thinking about how much of that is already spoken for, and the answer is $2 trillion. And that's why I expect the devaluation would be the answer, because that does solve the capital account problem.
Sure. And if you're the Chinese government, why would you blow your dry powder on trying to prop everybody up and bail everybody out? I mean, as they've already proven, you could just shut it down and threaten people with criminal investigation if they try to trade. So
I think that's right.
It just goes to show. I mean, you and I have been banging the table on why you need to take a hard look at physical gold for a long time. But I think these are all the reasons that you have some of the smartest money managers in the world, like Ray Dalio, talking about it. So, all right. So moving on, our last topic, Jim. In our private discussions, you've mentioned something to me called the myth of August. For our listeners, Jim, can you elaborate on what that means?
Sure. The myth of August, it started as kind of a fun thing with me, although it's not fun in the sense of the specific events that I used to illustrate it. But and the idea, of course, here we are, 2/3 of the way through August, so not too much time left, but plenty of time for fireworks. But the idea was, of course, August is a very popular vacation month. It's the last month before kids go back to school. It's a great time at the beach. It's set mountains, et cetera, et cetera. And, from Europe to North America to around the world, a lot of people take their vacations in August. So everyone's, at least my part of the world, they're in the Hamptons or the Jersey Shore or Cape Cod or wherever. Offices empty out, whole industries, publishing almost practically shut down, and nothing happens. It's just quiet, and we all come back to work on Labor Day, and we're rocking and rolling on Labor Day. And that's the myth. The reality is quite different. Well, the myth persists, by the way. People still think that. But the reality, you look at the things that have happened in August, they're not just newsworthy. They're among the most momentous events in history and financial history. Most famously, tragically, of course, what Barbara Tuchman great writer and historian, called The Guns of August, which was the outbreak of World War I. But even in more recent times, it was August 15th, 1971, when Richard Nixon ended the gold standard. It was August 7th, 1990, when Saddam Hussein invaded Kuwait. And George Bush, Bush 41, said this will not stand, and we sent troops to Saudi Arabia, airlifted them into the land of the two holy places, as the Muslims say, literally the next day, which, by the way, gave rise to Al-Qaeda. It was August 1998 that we had the double embassy bombings in Kenya and Tanzania. And Bill Clinton responded with cruise missiles. August 1998 was also the famous Russian default, which led straight to the meltdown, global financial crisis, and meltdown long-term capital management. And of course, that landed in my lap because I was their general counsel and negotiated that bailout. August 1991 was the Salomon Brothers trading scandal, when Salomon, the largest U.S. bond dealer in the world, almost went bankrupt, which would have started another financial crisis. Warren Buffett came in as a white knight, bailed him out, and the Treasury backed off from the threats against Salomon. So that crisis did not go further, but certainly had the potential to do so. August 1991 was also a Russian coup. Some crazy KGB guys kidnapped Mikhail Gorbachev. Remember that one? And I think the coup was busted because they got drunk on vodka, so their situational awareness was not the best. But they did kidnap the general secretary of the Communist Party in an attempted coup. And I don't have to belabor it. You get Hurricane Katrina 2005. So don't need to belabor it. But I'm very wary in August. Just a lot of very nasty things have happened. We're in the home stretch here, just about 10 days left. So hopefully it's quiet. But given everything we mentioned at the beginning of the podcast, Alex, about North Korea, I'm not so sure it will be quiet. The U.S. goes ahead with this military exercise, which I expect, and Kim Jong-un responds with some kind of test, whether it's submarine-launched ballistic missile, nuclear device, or an ICBM aimed at Guam, which I also expect, then we're not going to make it out of August without an earthquake and a financial earthquake. Let's see what happens, but I wouldn't put my feet up quite yet.
Yeah, and I think that these are all just really good reminders that revisiting the whole liquidity thing. So many people are so heavily invested in various different, what you and I call paper products, that require some kind of counterparty to perform. The IMF in a recent paper basically said that gold is the only financial asset that you can buy that does not require a counterparty for it to retain its value or for it to have value. Right. And I wasn't going to share this, but I'm going to mention that I had a conversation earlier this week with the head of a trading desk. It's got 15 guys under him. They're running a lot of money. It's one of the largest financial houses in the world. If I mention the name, everybody would immediately recognize it. I'm not going to say who this person was, but in a candid moment of discussion, he mentioned to me that these guys are pretty nervous about this kind of stuff. They listen to our podcast on a regular basis. They say they don't miss a one. So thanks, guys. We appreciate the support. But, he mentioned that if it were up to him, in regards to all the paper investments, in other words, the ones with the counterparty risk and the ones that rely on exchanges to trade, et cetera, if it were up to him, he'd sell it all right now.
Yeah, first of all, thank you if you're listening. Thank you and your team for joining us. The one thing I would say, Alex, there's a name for a store of value that does not have counterparty risk. It's called money. And people say, "Oh, I have money in the bank." No, you don't. You have a bank deposit, which is an unsecured liability of a occasionally insolvent financial institution. Even a Federal Reserve note, if you read it, it says Federal Reserve note. Where I went to law school anyway, a note was a liability, which it is. And so money, people don't think hard about what money is. They take a lot of things for granted and assume it's money, and it's not. It's something else. But you're absolutely right. And again, to go back to where we started, people say I'm nervous about buying gold. I just say I'd be nervous if I didn't have any.
Absolutely. All right, that about wraps up today's podcast. Jim, I just want to thank you for the time, and the discussion has been invigorating. I think we covered some really great stuff, and I very much look forward to our next one.
Thank you.
You have been listening